Here we have the hourly price chart for NVIDIA Corporation, stock ticker NVDA. As we can see here, we are encountering some fairly strong selling pressure here to start the Thursday trading session. Um, Most of these movements, they're not unique to NVIDIA at this point. I just finished a video on Apple and another one on Broadcom, and very similar moves are also occurring in those stocks. So it's relatively clear here that we're seeing a kind of a broader sell-off in tech. I do not think that this is being focused specifically on NVIDIA, but there are some interesting price levels that do need to be noted here. Because if we're going to develop a game plan here to identify potential buy zones, we do need to define some areas of resistance and support, so that we can kind of figure out where the broader trend here is actually heading. So the first thing that I would want to point out here is the indicator reading itself. This is the hourly chart, so the indicator reading and the exponential moving averages and things like that take on a bit more significance when we're dealing with these commonly used charts like the hourlies and the dailies. So the first thing that I would want to point out here is the fact that the RSI, the Relative Strength Index, that's the purple line down here, is currently breaking its more recent uptrend movement. So this does kind of signify an end to the prior upside trend momentum for the stock. And then in addition to that, we do have some moderately bearish readings here on a longer term basis, on a slightly longer term basis. This would go back to this activity here would go back to the prior highs, which were posted just above the 140 level. So we will need to watch how to see how these trend movements here develop going forward. But as we can see here, I can kind of zoom in on this here. We are currently breaking through this uptrend price movement. That was in place previously. So it does look like this broader sell-off in the market, this broader sell-off in tech specifically, is going to be centered on NVIDIA as well, because this is kind of the star of the show here. And the lowering tide lowers all boats, so to speak. So, we do need to look at some important price levels here. We also need to consider the fact that, trading volumes here are rising a bit, and they are posting negative. They are showing selling pressure here. So as we can see, the downside, the bearish trading volume here is encompassing the prior bullish volumes that preceded it. So overall, we were trying to look for some negative evidence here because there were so many people that were trying to call a top in this stock. We were trying to, look for arguments that could point in that direction. In my view, all of those price patterns are no longer valid. I mean, I do not think that we can point to any of those. I've been bringing up this guy that was trying to argue that this was a bear flag pattern. Makes no sense at all. You don't see rallies like this within a bear flag pattern. You also don't see a flag that's larger than the flag pole. So that argument didn't make any sense. I was trying to come up with a possible head and shoulders pattern here. But that pattern also is invalidated with this type of upside trend movement. You can't just break through, the shoulder like that and create another shoulder, or is this another head? I mean, is this like a Siamese twin head and shoulders pattern? I mean, that wouldn't make any sense either. So, all of these bearish price movements and price patterns have become invalidated. I'm not concerned about those specifically. But this does look like it's a more broad-based sell-off throughout tech and throughout the market as a whole. There is a lot of argument that can be made here about the market as a whole being overvalued. We really haven't seen much corrective downside price movement in quite a while. So there's nothing wrong. There's no reason to get alarmed here. These are downside price movements, sure, but you can't just expect things to go up forever, and that's not healthy anyway. You need to see some downside corrective pullbacks so that weaker positions can exit the market. Some people can take profits. They can buy back in at lower levels. I mean, that's really what strengthens an uptrend over the long term. You can't just see constant upside price movements. I mean, those types of moves are not sustainable. So, overall here, we were really trying to come up with a bearish argument here, and it just didn't materialize. So, you can say here that this is a corrective pullback, but I'm not seeing any major reason to get alarmed here. One thing that I do want to note here, though, is the fact that I did point out the 78.6% Fibonacci retracement yesterday, and look at where we topped out here. This is exactly where we topped out. So the price level that I was pointing to yesterday as a potential area of resistance came at the 78.6% retracement of this bear wave here, of this downtrend move here. So it's very interesting to see that this is exactly what we saw here. This level comes in at 135.88, and the price level here failed just above 136. So we're talking about pennies here. We're talking about about a quarter in price difference here. There's a lot of alignment here with the 78.6% Fibonacci retracement. So that is a significant move here. If we did break here to the top side, the next expectation would be for a full retracement of this entire downside move. This does complicate things a bit here, given the fact that it failed right at this level. This is now. There's no question that this is now the critical level to watch here. Just above 136 is now the critical level of resistance. That will be important. It will be key for unlocking potential upside here. So, currently what we want to do is try to assess some potential support zones to see where prices might start to fall. How much further can prices fall? What are we really looking at here? Of course, this largely is going to depend on what the broader market does. I mean, if we're seeing all stocks drop here, it does stand to reason that NVIDIA has had many instances here where it is holding up the market on its own. But that's a Herculean effort. What's that sculpture with the guy with the world on his shoulders? He's kind of hunched over with the world on his shoulders. I mean, NVIDIA can only do that for so long. We can't really expect one stock to hold up the entire market. That would not be reasonable. So here what we first need to do is to start to look at the moving average cluster. As we can see here, we've already broken through the yellow line, which is the 20-hour exponential moving average. We are on the hourly chart here, so these moving averages do have a bit more significance. Currently, we're kind of running into this orange line here, which is the 50-hour exponential moving average, and this does come in line with a bit of support, historical support that was generated during the Tuesday, July 9 trading session. So, it's possible we could get a bounce here. I'm not too optimistic about that, given the fact that the momentum reading has also broken. And this could just be a broader based sell-off that is going to hit NVIDIA as well, because this is a stock that's trading at extremely high levels. So these are the levels that we will continue to watch here going forward. A break to the downside would be expected if we see prices fall below 128.80. And it does look like we might be in store for something like that. And then to the top side, what would take pressure off of the downside would be an upside break of roughly 136.10. Then we would expect the selling pressure to start to abate. Okay, so here's the current market analysis for NVIDIA Corporation, stock ticker NVDA.